Hello everyone, welcome to my channel. Today we will speak about a company called Apollo Sinduri Hotels Limited. This is a company promoted by the management of Apollo Hospitals. So the way this company started is they were catering to the needs of food and beverages of various Apollo hospitals across the country. From there, they diversified into other areas. They targeted more organizations, they targeted more educational institutions, they targeted more hospitals. And today, it is one of the very few listed organized players in this particular segment. Now, along with catering, they have two more lines of businesses. Number one is restaurants, and number two is hotels. Okay, so they have a restaurant in Chennai and they have one hotel in Bangalore. Okay, along with these lines of businesses, the company has one subsidiary called as Olive and Twist. Okay. Now, this subsidiary is into the business of running restaurants, alright, and they have one small business into co-working spaces. Okay. So that is pretty much about the business areas in which Apollo Sinduri Hotels operates. Alright. Now coming to the point, why has the stock run up sharply in the last 1 month? Okay. So about a month back the stock was trading about 800 900 rupees, and today as we speak the stock is trading about 1600 rupees. Okay. So let me give you a little bit of a background here. The company had a joint venture. Okay, the name of the joint venture was Faber Sinduri Management Services Private Limited. All right. Now in this particular JV, the Apollo Group held about 49%. Okay, and Faber held about 51%. Okay. Now what has happened is on 5th of October, the company Apollo Sinduri has given an exchange disclosure saying that they have purchased 51% stake from Faber for a price of rupees 70 crores. Alright. Now the market is really excited about this news. But how does this translate into the numbers and how has the market interpreted all this? Alright. So if we look about the full year earnings per share, okay, of Apollo Sinduri. So before acquiring 51% stake from Faber, the full year EPS for Apollo Sinduri on a consolidated basis is about rupees 56.9. Alright. And if we talk about the extra profits that Faber acquisition or the Faber stake acquisition brings to Apollo Sinduri, it brings in around a profit of rupees 10.89 crores. Alright. So if we look about the incremental EPS or incremental earnings per share that the Faber acquisition stake acquisition brings to Apollo Sinduri, okay, we see that there is an increase of about 17 to 18 rupees in the earnings per share of Apollo Sinduri after acquiring this stake. Okay. Now, before the acquisition, the earnings per share of Apollo Sinduri, like I said, was about rupees 56. Okay. And after the acquisition, this earnings per share, it suddenly increases from 56 to about 73, which is about a 30% gain, straight gain in the earnings per share for Apollo Sinduri on a consolidated basis. Okay. Now, this is exactly the reason why the market is excited about it, because Apollo Sinduri as a company, they had cash on their balance sheet. Okay, it has always been a cash rich and debt free company, and the market was actually questioning the management as to what are your plans regarding deploying that particular cash. Okay, and when they today, on 5th of October, they announced saying that we are using that cash for acquiring 51% stake in the Faber JV. The market is obviously excited about it because cash is being utilized, and that utilization of cash is directly getting transferred into a 30% higher earnings per share for the company. Okay, so if we look about the higher, if we consider the higher earnings per share for the company is today trading at about 21 times the price to earnings multiple. All right. Now that's not a very cheap valuation to say, because this is a small cap company and paying 21 times the earnings for a small cap company is not really something that I would call as cheap. Okay. But the point is that this company Apollo Sinduri, it has a very small free float available in the market. Okay. So if you go to the balance sheet and look at the equity, okay, it's an equity of I think about 1.3 crores. All right. Now 1.3 crores, the face value is 2 rupees. That translates into about 65 lakh shares, okay, which are outstanding. Okay. Now out of the 65 lakhs, a big chunk of about 60% plus is owned by the promoters. Okay. So that leaves a smaller chunk of about 40% to be freely traded on the exchanges. All right. So from my experience, what I've seen is whenever the free float is low, okay, The company is a low debt company. The company has made good use of cash. The stock price generally does not come down. Okay, so paying 21 times as such, yes, it is a high valuation, but if you combine the multiple points that I told you, I think the valuation is reasonable. All right. That's all I have for now. Okay. This is not an investment recommendation. Okay. Let me give a disclaimer. I have been invested into this company. My clients are invested into this company. Okay. So do take my analysis with a pinch of salt. Okay. And before making any decision, consult your investment advisor. Thank you very much. If you like the video, do press the like button, subscribe to the channel, and do not forget to check our small cases. Thank you.